All right, folks, welcome to another edition of This Week in Crypto here on March 25th. There is a lot to be happy about over this past week. We've seen the prices of many projects jump into double-digit percentages just in the last 7 days. Bitcoin is on the brink of 45K for the first time since the beginning of March. It crept up to about 44.87K last I saw on the prices. Ethereum is very close to 3,200 right now. That would also be a 3-week high. And then we just see a vast amount of green here. We can see that Ethereum Classic has been going nuts. I've seen a few requests for us to cover that one. So we might try to give a little bit of an extensive look at Ethereum Classic. Axie Infinity is back on track, almost hitting 50%. Same with Chainbing. Loopring has been on a tear. Dash, Convex, among some of the leaders in the top 100 market cap projects in crypto. Obviously, there are quite a few reasons for what's going on right now, and we're going to do our best to uncover exactly why we've seen such a nice surge, not just this week, but last week was looking good too. Largely, the real-time events, the real-world events, I should say, have come back to earth a little bit, and they're not as much of a concern right now for crypto and equities traders alike. That obstacle clearing the path for prices to flourish has certainly allowed, obviously, prices to flourish. And with that, we're going to do our best and navigate exactly why. Remember that what we do here is not investment advice. We simply are trying to find what the bullish and bearish divergences look like at any given moment and figure out historically what has happened when these types of setups have occurred in the past. Whether that be on-chain, social, whale activity, certain trends popping up on Twitter, Discord, Reddit, Telegram, what have you. We'll try to look into as much as possible. Another thing to keep in mind here on the screener, yes, it's a sea of green on the prices, but check out the social volume here. We can see that Bitcoin's social volume this week compared to last week has actually dropped by 12%. While Ethereum has jumped by 13%. And it's kind of neutral around here. We see stable coins, Binance Coin down a little bit, Avalanche up huge. Binance Coin, for whatever reason, is being talked about a lot more, along with UST. Matic is up quite a bit in discourse. DAI, Kronos, Near. It's an interesting mixed bag here, but the two main stories is Bitcoin down, Ethereum up. And that's significant because we typically want, during bull runs or during breakouts and emergencies, we want to see Bitcoin continuing to get a lot of attention. And if attention is actually being taken away from it and going toward altcoins instead, that can be a sign that people are getting a little too euphoric about the crypto markets and looking toward assets that maybe don't have as much pull and validity for getting the attention that they are getting, especially when Bitcoin is getting less attention over time while prices are going up. We've seen historically that can lead to big retracements, and we'll get into that a little bit later and show some examples. 12% isn't exactly a huge plummet, but it's enough for us to be a little concerned that there's a little bit of attention being taken away from that asset that essentially keeps the rest of crypto afloat at any given time. So just keep that in mind and understand that there is a little risk there, despite prices looking so great and flourishing the way they have been. That said, let's take a look at a few other charts that I've prepared here before we dive right into on-chain and social analytics like we usually do on these calls. First thing I wanted to point out is the fact that the three main crises over the past, 2 years, if you're talking about pandemic, or last 3 to 6 months, if you're talking about inflation, or just the past couple months, if you're talking about the Russia-Ukraine conflict, they're all coming down, right? We can start here with the Russia and Ukraine conflict here in light blue, where we can clearly see, there was some growing concern a couple weeks prior to the war being announced. This is, of course, when the war was announced. Fear was really starting to set in here as there was a leg down. And then, boom, we have this big leg up. Fears start to dissipate on crypto platforms. A huge drop happens where suddenly everyone's talking about the war again and trying to figure out a reason why the drop happened. And that was pretty much the last time here on March 4th that we really saw significant discussion, March 4th, 5th, related to Russia and Ukraine. And then we can see that over the last 20 days, 3 weeks or so, the mentions related to the war have just steadily dropped off on crypto platforms. And that's a good thing because it means that we don't see as much real world impact on the markets, at least according to the sentiment of traders. And that has allowed, since this final real spike on the 5th or so, that's allowed prices to go from about 37.8 up to where we are now at about 44.8. Really nice percentage rise there over the last 3 weeks. And something to keep in mind, especially when we compare that to the FOMC or inflation. I'll take off Russia and Ukraine so it doesn't skew the axis so much. So the FOMC or inflation spike, it really all occurred just a couple days prior to us hearing the news that Powell was almost positively going to raise the interest rates by a 0.25%. That's exactly what happened, I think a couple Wednesdays ago. And with that, prices have risen quite rapidly since. We see that right when the spike happened, prices were sitting at 38K, give or take, now up to 44.8. So this is another lesson about how these real world events, as they've come down to earth, and now that we know what the rumored expectation was, how that came to fruition. Now that we've seen it come to fruition, we're able to kind of clear the path and understand that to an extent, the prices were kind of baked in by the time that the FOMC announcement of these interest rate hikes actually occurred. And that told us it was kind of a classic example of selling the rumor, buying the news, right? Everyone gets overly fearful of an event happening. The event does happen and everyone goes, okay, now what? And essentially the price starts to reverse. It doesn't mean that this will be the case forever, right? Because we still have the Russia and Ukraine conflict existing, and we still have the pandemic existing here as well. So looking at the pandemic, this is just the last 3 months. But if we go back to the beginning, more or less, we'll just say, March 25th, 2020 is fine. That's a couple weeks after Black Thursday occurred. We initially, I'll go back one extra month because I think it's important information. So this is February 2020 up until now. We see here the axis is a little dwarfed because Omicron right here really created some massive spikes. But going back here, this was a huge spike at the time of social mentions related to the pandemic. We saw obviously the huge price retracement on the 10th and 11th of March 2020. And as it peaked here about a month later, first week of April, prices were already starting to rise just a little, but people were quite indecisive about how much the pandemic was going to affect crypto. And then notice how it just started to dissipate, and it dissipated in tandem with prices rising. And really over the course of the next 6 to 7 months, here in late September, early October, we really just saw a continued decline in mentions related to the pandemic. And then, of course, a huge bull run that occurred going all the way up until April, took a pause, and then back in October and November, it hit a new all-time high. But the social volume outside of right here, where we had a huge correction, was all well below the initial concern over the pandemic when it first came out. And this makes sense, right? People, when the pandemic first hit, people were talking like everyone was going to die or a significant amount of people were going to die. And obviously this is beyond our pay grades to talk about the real world impact of the pandemic. It was obviously massive, and millions of people died and got ill, and anything in between. And it still is terribly sad. But the initial fear was really the worst up until Omicron happened. And this was essentially the second wave where there were more cases going on here than there were back here. So it only makes sense logically that there was more discussion about it. That said, as things started to dissipate, especially right here at the beginning of February, prices were able to start rising. And it wasn't until war news happened here that the prices actually had something pull them back again. If the war news never happened, it's anyone's guess how things would have gone. But I would be willing to fathom that there would have been a little more of a gradual climb, and we could potentially already be above 50K again for all I know. But the point is, these real world news things that happen generally cause panic initially. And then when they actually play out and we get our bearings as to what this news means, it usually isn't as bad as we think, even when it comes to something like the pandemic or the war, which is of course two very bad and horrible things that have happened and are still going on. It's really just a matter of going, how much should this impact the crypto markets? When we see it at its worst, and then once we have a perspective of what the worst impact of these events are, that's when things start to get better, because we're no longer in fear. We're more in the process of digesting the information and reacting to it, if that makes sense. So just wanted to point that out. I think it's really interesting how these three real world news things have impacted where the markets go next. And we're seeing all three of those subjects really die down as the prices rise. Some may call it cause and effect, but I think there's some truth to seeing the social volume of crises start to dissipate, and then in the future, as a legitimate leading indicator, being able to decide where prices are going to go. And I don't think it's a surprise at all to see that markets are thriving the way they have been here. All right. Another thing I'd like to look at would be the comparison between crypto and gold and the S&P. Let me give this a refresh. Also get rid of a few notifications that are bugging me. There and there, much better. Okay. Oh, that's weird, it went away. Let me switch it. And let me add Ethereum again. Okay, so here in green we have Bitcoin, pink is Ethereum, the teal is the S&P, and gold is gold. We see a few things here looking at the last 6 months. For one, pretty much for the entirety of the past 6 months, we've seen crypto pegged very closely to the S&P and equities markets in general, especially Ethereum, which is surprising. So look at Ethereum beginning here. Actually, let's zoom in just a tiny bit to the last 3 months. Yeah, much better. So Ethereum in pink, S&P in blue. Look at how tight they've been to each other, even more so than Bitcoin, especially right here. It appears there's a very tight correlation that has not gone away. And yes, crypto's thriving, but so is the S&P actually. The S&P since about 10 days ago, if I just drag this really quick, shift drag it. Yeah, the S&P is up about 7%. Ethereum's up 21%, and Bitcoin's up 12.5%. So all three have been going up in tandem, with Ethereum obviously being the biggest beneficiary. And then gold, on the other hand, has been the kind of inverse for a while, especially about a month ago when the war news was breaking out. Look at how there was a huge spike here, and then Bitcoin, Ethereum, and the S&P all dropped. I find that fascinating. It was still coming true a little bit here. And then right here, when there was a huge leg down last week, gold went down, crypto went up. This is where they sort of consolidated. And now we're going to see if there's finally going to be a little bit of that separation, which we root for when it comes to crypto. Even when crypto is going up, if it's going up pretty much the same direction as the S&P, that limits its potential, right? We've seen historically that Bitcoin, Ethereum, and the rest of the crypto markets do best when there is no correlation, not an inverse correlation, not a tight, what's it called, synonymous or uniform correlation. We want zero. We want the S&P to do its thing and crypto to do its thing without any sort of reliance on one another. And perhaps that's a pipe dream, because more and more, as more retail investors have gotten involved, there's a lot more overlap with traders who participate in both equities and crypto. But crypto is still cyclical, and there are always going to be times and intervals where crypto does its own thing because of its decentralized nature that gold and the S&P won't keep up with. So that's what we're hoping for, and that's really what was happening during the pandemic. I should say during the early first year of the pandemic. So if I go back to 2020, so yeah, Bitcoin here, yeah, especially here, like it absolutely crushed it. And yes, the S&P was going up steadily as well, but not nearly in the same ways as crypto. Crypto, let's see, since late March 2020 to its peak, Bitcoin's peak, Bitcoin went up 870%. The S&P went up, it's not showing. One more time. There we go. S&P went up roughly 58%, gold 6.5%, Ethereum 1,700%, right? So especially that last number, Ethereum was reflective of a lot of altcoins out there that got 1,500 plus returns, even 2,500% plus returns during that run. And it really showed that when Bitcoin wasn't super reliant on the S&P and it was able to go, up when the S&P went down, or even down when the S&P went up, that told us there wasn't much correlation. There was just a lot of people investing in what they wanted to. There were many more people at home, which in hindsight helped the markets because people weren't working. People were investing more and getting more interested in crypto. That helped increase the market cap, what have you. And that's really what we want to get back to, is letting people make their trading decisions based on the events and news that's coming out about crypto, rather than equities markets are looking good, I guess crypto is going to pump too. Equities markets are looking bad, I guess crypto is about to fall off a cliff, right? And that's what we've really seen over the last 3 months. And eventually we're hoping that goes away. But for now, we can still celebrate a little, because crypto is looking pretty good. As I said, Bitcoin is on the verge of hitting 45K. One other thing I wanted to show, and we tweeted about this just a couple days ago, 44K or 44,000, which is of course since been breached. But check out these social volume spikes. I find this fascinating. Yeah, that's the last 3 months. So anytime we've gotten either close to 44K or breached it, we've seen these big spikes in social volume that have essentially reflected people celebrating or anticipating this big milestone that, at least here for the last, I don't know, 3-4 weeks, 44K has been this strange psychological support that we would hit and then fall back on. And you can go all the way back to really when I wouldn't go August, let's go just the last month to really show. So yeah, going back even to here, February 25th, this was the day after war news broke. We had a big correction after 44K was mentioned. We had a huge uptick a couple days after the war news broke, huge social volume spike, and then suddenly a lot of volatility and a big drop. And then lately, right, we saw this big social volume spike in 44K. Things started to waver a little bit, but this time it finally broke through and got back to 45K. So that was a great sign, and something to keep in mind with psychological support levels and resistances, whether it's a more abstract number like 44K, or in the near future, perhaps a 50K mark might see the same kind of thing. Watch to see how much people are actually euphoric about that number and celebrating that number if it gets passed, because oftentimes it'll create a self-fulfilling prophecy where suddenly people who were bearish see 50K and go, all right, now that this resistance was breached, I'm now bullish again, and I think it's going to go to 60K and beyond. That's when you want to pump the brakes a little and go, people are getting a little too greedy and euphoric here. We need to be a little more careful, take a little profit, and you'll likely be on the right end of things, because as we've talked about many times, prices go the path of least expectation from the crowd. That's always been the case in crypto and always will be. All right, Baresh, any questions you're seeing or comments? I can actually just look at them myself and see what's going on here. Not really. It looks like there's...
But no questions about what you talked about so far.
Yeah, ICX, SRM, Berg is wondering why we're not mentioning Cardano in the beginning because it outperformed all assets. The reason, Berg, is because we try to focus on the assets that are most prominent to controlling where the rest of the markets go, and that's Bitcoin and to a very small extent Ethereum. Cardano is something that we'll touch on, but that doesn't mean just because an asset that's in the top 10 performs better than Bitcoin doesn't mean that we're going to skip Bitcoin and talk about that asset. So hopefully you can understand that. All right, so we're going to start with some Bitcoin on-chain metrics. We will touch on Cardano, as I said. I also just got an announcement from our devs that Cardano metrics are fully up to date and accurate to a T, whether it's supply distribution, MVRV, on-chain metrics, social metrics, everything. So I'm excited to really touch on that for the first time and look at it myself. First and foremost, though, let's take a look at Bitcoin circulation. We see that there's been a very slight uptick, but really not much to be said. If I go back to the last year for context, we can see that the big uptick occurred going up until mid-December, then dropped off, and then had a very gradual climb ever since. So not a ton to say about that, other than the fact that on our circulation NBT model here, this is our 6th straight month of seeing a semi-bullish divergence, which is great. The last 3 days have all been very healthily under the average bar for March, which is great. And overall, this shows that there's an open door for prices to thrive right now, especially with some of the real world events coming, being much less of a concern for traders than they used to be. So Bitcoin's looking good there. Briefly, while I'm here, we can also take a look at Ethereum, which is interestingly showing 2 bearish signals still. We are not seeing enough circulation to justify the market cap for where Ethereum is right now. And that is something to pay attention to, considering Ethereum has been thriving substantially over the last couple of weeks. So moving back to the on-chain analytics for Bitcoin, we see daily active addresses kind of in the same spot as circulation, arguably looking just a little bit worse with the trend line moving down ever since really the all-time high levels back in mid-November. So that's something to keep in mind. The amount of unique addresses interacting isn't quite where we want it to be right now. As far as MVRV goes, this is looking like a bit of a concern. We've seen the 30-day average returns shoot up to about 6.5%. And generally speaking, any percentage over 0 right here means that there is some added risk to being invested in whatever asset you're looking at. We can see back in early to mid-February, when things really got high, that was when the tops formed. We saw another top form here when we got to about a little over 8% price correction. And then once things became negative, that's when things really took off. And now we're back in positive range, not in a super concerning danger zone, right? That's why these lines are here, to show where that top mark is for where historically we'll almost always see a correction, or historically down here almost always see a price bounce like we did back in May. So this is a little concerning. I would call this kind of a semi-bearish signal because this implies that there is still room to run because it's not above the danger zone, but it is something to keep in mind and be weary of. We can also look at this MVRV opportunity and danger zone divergence model, which shows when combining all of the timeframes together, the key timeframes for MVRV that Santiment has: 1 day, 7 day, 30 day, 90 day, 180 day, and 365 day. Bitcoin was showing a little bit bearish. It's going to refresh and may take a couple minutes, so I'll probably just come back to that in a few segments here. So MVRV slightly bearish doesn't necessarily dictate that we're in a super corrective area that's right around the corner, but it does mean that we're in a more risky time than usual. Weighted sentiment. So this was kind of the theme of what we wanted to talk about on the stream today. I'll give this a little bit of time. Essentially, the more negative the crowd is, the more likely prices can thrive. We saw the big uptick that occurred in right after late September when people were getting particularly bearish. That caused these big surges to happen. And then, of course, we got these huge positive euphoric spikes telling us that a top was near. We hit that all-time high about a week later, and then boom, huge plummet. Right now, we are definitely in negative territory. This means we're at about a negative 1.6 standard deviation divergence right now from the normal amount of commentary and sentiment toward Bitcoin. That's something to keep in mind because we are definitely thriving right now, at least in the last couple of weeks. You know, just highlighting the last couple of weeks, Bitcoin's up a little under 16%, but here we are with a ton of FUD right now. And this is for a couple of reasons. I think people are so used to seeing the 44K or even 45K mark hit and then a quick correction occurring. So many people are taking profit and saying, don't be a sucker. This bounce has already happened 3 times and we've been rejected every time. So there's that. There's the fact that the pandemic still exists, the fact that the Russia and Ukraine war is still very much in existence and arguably even heating up with the amount of news that's still breaking every single day. Inflation is still a concern too. We haven't talked about this on the call yet today, but there is an expectation that there's going to be another FOMC decision to be made in May that could impact inflation and interest rates even more. So that's a fear as well. So none of those 3 subjects that we touched on have gone away completely. They're all still a fear. And combine that with the patterns that many TA traders have been seeing, it's a recipe for people to have a lot of doubt in this rally that we've been seeing right now. And that's reflective in our weighted sentiment metric. You know, people on Twitter, Discord, Reddit, and Telegram, they're all in tandem, not only spouting a little more negativity toward Bitcoin than they are usually, but they're also talking about Bitcoin less because weighted sentiment covers both the social volume and the sentiment of Bitcoin, and both are down right now because altcoins are getting a lot of the attention, and overall the real world news is impacting the markets. So weighted sentiment is something to really keep in mind. We can also look at more of a macro view. And I think this is due to being an incomplete week, but I'd still fathom it's around here, probably one of the lowest, most negative weeks we've seen during 2022 thus far. And really, that's a good sign and can mean that the markets will continue to surge and catch people off guard as long as people are so bearish on Bitcoin right now. We saw a similar thing here, like it was an extended downturn that began in mid-May and didn't bottom out until mid-late July. And we had 1, 2, 3, 4, 5 straight weeks of very negative sentiment toward Bitcoin. And then all of a sudden, we finally see this big rally and everyone goes, oh, okay, we'll be positive. And people are buying here instead of buying down here like they should, right? And we might see something similar. You know, if Bitcoin finally creeps back to 45K and beyond to 50K, I guarantee we're going to start seeing another positive spike like this, or even some huge ones like this, where everyone suddenly decides Bitcoin is great again, and all that fear was for nothing. So weighted sentiment is one of my favorite metrics. I know many of you love it as well. And I think it's a really important thing to keep an eye on. Just to briefly get a little more context, let's go back 3 years. So we see one standing out above the other, and that is the Black Thursday spike down. This is where everybody was calling Bitcoin to drop even further when it got down to about 3,400 or so after being as high as 10K just the month before. And if you were to buy in during the largest negative spike over the last 3 years, if I drag my mouse, I'll just take it all the way to present, you'd be pretty happy at a nice solid plus 692%. And even short term, right? If you just did like the next 2 months following the negative spike, that's about a plus 66, plus 67% gain. So, you know, we believe in this metric very strongly and think you guys should really give it a look if you don't already. It can be a tremendous peek into how the average trader is thinking about Bitcoin and how to ensure that you aren't falling into the same trap as the rest of the like-minded crowd who all uniformly believe one thing when we're super negative here or one thing when we're super positive here, and making sure to adjust and go against the grain a bit, not just for you know, reasons of being a contrarian. You want to actually do it when things are really extreme, like here or here, and not try to get too cute just on like a very minor spike here or a minor spike here. That's how we like to look at weighted sentiment. All right, supply and exchanges. It's really been a continued downturn, guys. It peaked way back again the week of Black Thursday at about 16.1% of Bitcoin on exchanges. It's now down to 10.2%. So we're talking about 5.9% of Bitcoin's overall supply being moved off of exchanges. And that's a great sign. We want to see less and less coins on exchanges as a validation for Bitcoin being able to surge, because with less Bitcoin on exchanges, that means there is less risk of a huge sell-off simply because they can't be sold off, at least on public exchanges. There can still be various other ways that people sell off their Bitcoin, but publicly speaking, this metric tells us a lot. And generally when we see Bitcoin moving on, we see bear markets like this. When it starts moving off, we see bull markets. Keep in mind, this is a very macro metric, not something to look at on a day-to-day basis and say supply went down, price must be going up next. That's not how it works. You want to look at this as more of a validator that long-term, less Bitcoin is on exchanges, therefore less risk, good for Bitcoin, vice versa, if there's a lot of supply rising. All right, next up, let's take a look at whales. Whales have continued to be a bit frustrating. In the last 3 months, let's go last 6 months, we've seen the supply held by this key category of 100 to 10,000 Bitcoin addresses peak at about 49.5%, and that's now down to 48.26%. So we're talking about, give or take, 1.2 to 1.3% of the supply no longer being held by this key top tier of active traders. We don't look at supply over 10K because that is usually addresses that are for exchanges and are not very active or reactive to whatever the prices are doing. But this key one being down tells us that there isn't quite a huge belief from the key stakeholders who have the most impact on where prices move next. That's scary because, yes, we've talked about a lot of bullish indicators for Bitcoin, but one of the most important, which is the Key whales is not looking the way we want it to now. They haven't really shown many signs of accumulation at all, outside of the occasional uptick on a big dip like this. This was an accumulation as prices were rising, interestingly. But overall, it's been a lot of profit taking. And even going back the last 3 years, we see that it's mostly been a nice accumulation, especially right after Black Thursday, a couple of weeks after, once whales felt like they had a pretty good grasp on what this pandemic meant and how they can react to it. They really started accumulating hard. And then in April, right before the all-time high, big profit take. And that, after a bit of a delay, we saw a big drop here, everyone bought the dip, but they were already taking profit. And that led to the huge drop off in May, right? And then once the drop off happened, they started accumulating again. And then rinse and repeat, they did the same thing in late October that they did in mid-April. They started taking a lot of profit just a couple weeks prior to the all-time high, a little above 68K here. Had a little bit of volatility. People bought the dip once again. This time it didn't really gain as much traction, and we just started a free fall, and then continued to chop a lot when all these real world events, inflation started being an issue here. And then the war started being an issue here. And I think it's an important point to just remember that no matter how good or bad some other metrics look, you always want to fall back on what the whales are doing to an extent. Because if they're dumping and prices are pumping, you have to be a little bit limited with your expectations on how high we can surge before whales start to jump back in. Like, whales aren't perfect either. And sometimes they're going to start accumulating after the rally becomes undeniable. Like back on Black Thursday, they actually dumped a week after the pandemic hit, and they decided this is going to be a tough stretch for crypto. And they were kind of wrong, because the dips were getting scooped up here very quick. Prices were really thriving. And then they finally gave up in the first week of April and said, all right, I guess we're going to jump on the train. There was still some indecisiveness here, but overall, you see that they were not too concerned from then on out. So there's a little on whale activity. I also wanted to bring up the amount of addresses, which is best to show in the tweet that we just put out. So a few things here. This is showing the amount of 100 to 1,000 coin addresses in pink, and the 1,000 to 10,000 addresses here in red. When there's a huge move by both, like we saw in the early part of May, right before the big plummet, you can see that they both started a profit take, and there were less and less overall addresses. That ended up causing the prices, I know it's a little hard to see with this bubble covering it up, but it did cause the price to fall off a lot. And there could have been many reasons for it, but whales taking profit about a week prior was a telltale sign, especially this 1,000 to 10,000 tier, which saw quite a few, probably 30 to 50 addresses disappear from this tier. And when they're both taking profit in tandem or diminishing in numbers, that's a sign that prices may not hold where they have been. Yes, the accumulation started while these number of addresses were still sinking a little bit, but eventually you see this big validation here where the 100 to 1,000 addresses are accumulating huge, and price eventually soars, right? And then again, we see the same pattern of declining number of whale addresses between 100 to 10K. This happened a couple weeks prior to the all-time high, but when the all-time high hit, we all know that the swift downturn was quite evident. And really, we just want to avoid being too heavily in an asset when we're seeing some of their key stakeholders taking profit and dropping off in large numbers as they were here. So if you're following something like this and you suddenly see a big drop off, don't be in too much pain if you see the price still creep up a little further. trading should never be a perfect science where you have to perfectly time the top or perfectly time the bottom, or else you failed in some way. You know, if you're up 70, 80% in an asset and you take profit right before you would have been up plus 90 or 100%, you'll still end up being okay, right? Because a couple weeks after the all-time high, you would have been well below, you would have been happy you sold here because suddenly your portfolio would have been well below if you did nothing. So that's something to think about. And the reason we like whales so much is because there is this 1 or 2 week delay oftentimes after a move is made. Sometimes it'll happen after an increase has already happened, sort of like here, where there was this massive increase in 1,000 to 10,000 Bitcoin addresses right as prices were moving up after the war news broke and things were bouncing again. Notice how they've continued to accumulate as the war has continued to progress, and that's a good sign as well. So yes, the amount of balance held by these whales may be down still, but the number of addresses appears to be growing for the 1,000 to 10,000 tier, which is the top tier that we like to pay attention to for Bitcoin. All right, I think this is a good time to transition to some altcoins. We'll give it a little bit of an extended look. I see that someone was very upset about us not hitting Cardano right at the beginning, so we're going to reward him for his anger and show him how things have been looking for Cardano, especially because we've just gotten the metrics to finally be exactly how we want them to be, and we're fully confident in how they look now. So it's going to be exciting to take a first peek here altogether. Were there any questions specifically about anything we showed for Bitcoin right before we transition, Balresh?
No, I think you can go ahead.
Okie dokie. So Cardano here, looking at circulation, I think this is too wide of a look. We'll look at the last year. And we'll also look at, now we'll leave it at 1 day. That's fine because we've got a 30-day smooth moving average in red. We see that the amount of circulation, at least in most recent times, peaked in early September, right before the crypto-wide drop-off. This, of course, makes sense because we had an all-time high established here. Cardano went a little above $3, and you see that the largest spike in circulation happened right at the top. That's pretty normal for an asset like Cardano or any altcoin, really. When you see a sudden huge spike, you may think it's a good thing, but unless it's a gradual growth like this, which leads to a price rise, singular spikes are more indicative of profit taking if they're happening in tandem with a huge price rise like we saw with Cardano. So these would have been the telltale signs to be a little weary due to a massive amount. It looks like at peak 2.42 billion Cardano were moved on this day, right after, I think it was, the day after the all-time high was made. So that would have been a sign to take a little profit, be a little more cautious. And sure enough, just like the rest of the markets, this was not unique to Cardano. We saw this huge slide over the next couple of months. We did see Bitcoin, Ethereum, and many altcoins make an all-time here, but eventually they caught up and fell back down with Cardano and some other assets that had already been struggling. Overall, if we look at the 30-day trend line, not looking great. It doesn't look like there has been a huge upward movement in utility despite prices rising. I understand that people are very excited about Cardano because over the last 2 weeks, it's up 43%. But keep your expectations a little tempered, knowing that the utility is down. And we can validate that by looking at daily active addresses, looking the same way. The amount of unique addresses have been falling and falling. It's pretty much, it looks like it's below the trend line that we saw in January. So it's at the lowest point on the smooth moving average line that it's been in 2022, with an average of around 135,000 addresses moved per day. We definitely want to see this improve. We do see, massive spikes here, even though it didn't do much with the price. This one did. The big uptick here did have an effect on prices being able to rebound temporarily. Same here. Just like circulation, you want to look at more gradual growth rather than singular spikes, stuff like that. So utility overall not looking great for Cardano, but we've got plenty more we can cover. Let's take a look at the MVRV opportunity and danger zone lines. So this is interesting. It looks like Cardano is in a danger zone right now. The MVRV on the 30-day time scale is at its highest since August. So this is around a close to 7-month high in MVRV. When it's up this high, especially above this trend line here, or marker, I should say, of plus 15%, that's historically a time where we tend to see corrections. And like I said in the beginning of the call, this is not investment advice. We simply try to look at historical extremes and tell you what typically happens when we get there. And the last 3 times that we saw the MVRV above this plus 15% line, here, and here, we saw inevitable corrections. This one and this one were instant corrections. And this one took a little more time, right? We had a bit of a lag where we saw MVRV get historically high, above 40%. Price rebounded temporarily. Then it went up even further. And if you sold up here, it would have been pretty much the same as selling just a tad above $3 instead before the big plummet. So keep that in mind. This is the 3rd largest MVRV we've seen in the last year, going back to August being the last time it was this high. We can also look at the sentiment right now, and yeah, not surprising at all to see that we are at our most positive, most euphoric point for Cardano in the last year. We could even go back to the last 3 years and see if there's been anything comparable. Yeah, it looks like the last time we got this euphoric was mid-February of 2021, and right when that happened, we saw a correction. And that correction caused the sentiment to neutralize, go back to normal. And then when it continued rebounding, people were even negative and didn't believe that it could happen. And then, of course, we had another huge weighted sentiment spike here, right at the correction point. So that was great alpha there. Pretty good alpha here, too, right before the all-time high, as we said. And then this one, interestingly, just on a very minor bounce, we saw a lot of euphoria there that didn't end up panning out for those people who were FOMOing in. So another bad sign for Cardano. It looks like the weighted sentiment was very, very positive right now, and something to be concerned about, considering the crowd feels very much like the commenter on YouTube who feels that this should be where all the focus is. And that's not good. We want the focus to be on Bitcoin so that other altcoins can do their thing more in the background. And if people want altcoins to be the prominent discussion, that usually leads to negative results for prices. Supply and exchanges, we don't have that for Cardano. We might eventually, but I think it'll be interesting once we do. Now let's take a look at whales. This is the first time I've really gotten to look at how Cardano whales are doing with accurate metrics. Cardano right now is sitting at $1.15 or so. So that would mean that the whales would likely be sitting in the range of 100,000 to 10 million. Interesting. 100,000, 10,000. Let's try at the very top. Ah, that's interesting. Yeah, so it looks like 10 million and above hold about 46% of the supply. And if we look at, let's take a look at the 10K all the way to 10 million. That's a big plummet. Wow. So there has been less and less supply held by the key stakeholders of Cardano since going back to last year. They peaked in February of 2021 where they were holding about 60 to 61% of the supply. Now they're down to 47.5%. I think we'd probably have to do more research on this. I find this to be quite an anomaly. It does look like it has a little bit of alpha, especially beginning. So if we go to just like the last 6 months instead, yeah, that looks a lot better. I think probably over time, Cardano's key stakeholders have had more and more alpha toward the coin, instead of just the anomalies that we saw back in 2020 and 2021 even. But yeah, overall, it looks like, when there is some minor accumulation from this group, that can trigger these big bull runs. And then they did take profit right before the all-time high, so that makes sense. And then the price has basically slid ever since, as there really haven't been any key stretches since August where these key stakeholders have been accumulating more and more. So really, the large addresses are siphoning their supply more and more to the smaller tiers, as we can clearly see here. Interesting that this 0.1 to 1 Cardano one is going down. But overall, like, look at the 4 tiers right below those whales. They're all just surging right now. They were at, let me make it a little bigger. They were at the 1,000 to 10,000 tier was at 3.3% this time last year. They're now at 4.65%. So that's an increase on their bags of 40% or so they've added. That's crazy. So it looks like there's been quite an inverse pattern between these smaller kind of, I wouldn't even call them sharks, probably the large fish, or the salmon, if you will. They've all been going up as the sharks and whales have been moving down. That's a long-term concern for Cardano, and might tell me that this rally is a bit, it doesn't have the support that we'd want to see just yet. Doesn't mean that the rally's over. This is, of course, a very long-term view that we're looking at right now. Whales are in general, but I would want to see the pink line show some signs of life before being really excited that Cardano can move right back to that $3 plus mark. Anything else for Cardano that I could show? Network realized profit loss. It does look like it did hit a pretty positive point here. Generally, when we see these positive spikes, it's a sign that people are taking profit while they're in the green. And when they have these big negative spikes, those are more people selling off while they're already at a loss. So considering people are taking profit in the green, that could instigate a little bit of a correction. But of course, the big spikes here are the ones you really want to pay attention to. Back in mid-August and mid-May, those had some serious corrections. Even this one here on January 17th, look at how it perfectly correlated with the top. This one perfectly correlated with the top too on March 1st. So this is a minor spike, not a huge one, but just keep that in mind. It's a minor concern right now. Development activity, Cardano has always been known for having one of the leading GitHub submission rates among top 100 assets. We can see if we go to the screener, and we click on dev activity over the last 30 days, Cardano is coming here in 5th. So it has the 5th most of any project of the 2,200 plus assets that Santiment follows, 5th most daily development activity submissions going on their GitHub. And this doesn't include, Slack updates or just mundane, security checks and things that projects do. We automatically filter those out to only show notable developments that are occurring on the project at any given time. So the only projects above it right now would be Uniswap, which is just surging right now. I really want to do a comprehensive study on why the Uniswap development activity is so high. Solana's up there, Polkadot's up there, and Kusama's up there. Those are the only 4 projects above Cardano. So that's a great sign for the long-term value of Cardano. The fact that it is among the leaders, even above Ethereum, in terms of how much development and innovation it's seeing on a day-to-day basis. This is a sign that the team involved with Cardano is very much a believer in the project's future, and they're not just pumping the price for a quick exit like we've seen with so many small and you-know-what coins out there. All right, so going back to charts, why don't we take a look at another asset? I'm going to take one more from the poll, and then we can take some that are happening, that are being recommended live on the chat here. Oh, I know what it was going to be. It was going to be Ethereum Classic. That was the first one I saw here. And obviously it's been up 70+% in the last week, and I think it's going to be a very good point of interest. All right, Ethereum Classic, let's take a look at the usual metrics. It's not an ERC20, or is it? I would presume it is, but it doesn't have the ERC20 metrics, so I could be wrong about. So yeah, so that would make sense. Yeah. So before the split, obviously, we didn't have the same ERC20 metrics as we do for Ethereum now and many of the other Ethereum-based projects that have come out since. That said, we can still look at a few key metrics like weighted social sentiment, and we see that, as you would expect with a plus 70% week, we are seeing the largest amount of euphoria of the year, going all the way back to mid-November was the last time. Actually, no, it's a little above that. It's very close. More or less, we're at about a 4-month high in terms of positivity toward Ethereum Classic. That, of course, would be a sign that a price correction can happen. The largest positive euphoric spike happened right before the huge all-time high that happened back on May 6th, followed by a big drop-off when all of crypto fell off a cliff here. Yeah, overall, we would prefer to see, just like any asset, weighted sentiment to be way down here. And the fact that it's really launched into euphoric status is a concern, and something that historically would suggest that a profit take would be justified here. And then development activity is an interesting thing to look at for Ethereum Classic. On the surface, a pre-chain split project, you wouldn't assume to have much activity, but it actually is. It's at least seeing about, at its peak, it was seeing about 10 or 11 submissions a day. It has dropped back down to just like half a submission a day. So it's not nothing, but it is very little. If we look at let's go to the last 5-6 years here. Yeah, it doesn't look like it follows any specific pattern. There's like a few big updates for like a week or so, and then Ethereum Classic goes back to having very little development activity. I'd call this not a very good sign for Ethereum Classic. It doesn't really show many signs of like long-term growth. I guess if you looked at just the last 9 months since June, this can be considered some nice growth, but there's so much inconsistency to it, and times where the development team isn't really doing much, that I would be concerned as a long-term holder for this project. And then finally, social volume and dominance. I think this can be an interesting thing to check out. Let's look at the last 6 months. So social volume first, we can see that it is getting the most discussion since the very first week of the year. This on a weekly, this is on a daily look. Let's take a look at just a weekly. Yeah, so it's getting a little more of discussion, but not quite to the extent you would think for a project that was the largest percent gainer of the top 100 in the last week. And then dominance-wise, kind of the same story. I'm surprised. It is up a little, as you would expect, but overall, it's mostly just fallen since the beginning of the year. If we look at its peak back in, oh, actually, it peaked in May of 2021. This would be something to avoid, right? You don't want to see a sudden huge discussion related to a project just because of its price action, which is exactly what happened here. And then everything fell off a cliff. And it happened kind of here in early 2020. This was a couple of months before the pandemic hit. We had a huge surge. It looks like if we go from like the beginning of 2020 up until that spike, the price had gone up 124% in those 2 weeks or so. So this was another case where there was going to be a local top. And yes, there was one more leg up, but eventually things really fell down. And this was even before the pandemic, so you can't blame that. Yeah, so overall, this is actually an okay sign. It means that even with a huge rally, the largest since August, uh, it's not getting enough, it's not getting a significant amount of attention. And in August, or I'm sorry, this was the June one. In June, when it had a big leg up, similarly to what's going on now, that did have a social dominant spike that perfectly marked the top. So this tells me it could have some more room to run, and people are not paying that much attention to Ethereum Classic as they usually would over this kind of spike. So this is a nice positive sign, probably the best sign I'm seeing for Ethereum Classic right now. All right, that'll cover Ethereum Classic. Balresh, why don't you shoot 2 or 3 projects at me from the suggestions coming in on comments here on the stream?
We had a request for XRP, and in the beginning, we had mentions of Icon, TrueBit, and Serum.
Okay, let's take a look at XRP first. All right, so we'll look at the last year of circulation for XRP. We're not really seeing too many encouraging signs. It's been, it looks like April, right before the XRP all-time high. Actually, no, this wasn't the all-time high. There was an earlier one a couple of years prior, but the 1-year high, it's been declining even going into that high and hit a bottom in July or so. We saw a pretty encouraging increase in circulation since July up until mid-January before it really started to drop, and it's been flat ever since. Not really too many notable things other than, just like most altcoins, try to avoid being in an asset if you see a huge spike in its circulation. At minimum, try to profit take. The last opportunity was on March 1st, looks like February 28th, March 1st, when there was a local top here. It hit 78 cents and declined about 9% over the next 2-3 days. Daily active addresses, quite a plummet. We were, at the beginning of the year, we were noting some pretty surprising daily active address outputs. And despite that, it didn't really have much of an impact on price. Yes, you can argue there was a little uptick here in early February while daily active addresses were super high, but this was most projects, and it didn't really see much deviation from the rest of crypto. There was some positive news coming out from the SEC about XRP about a month ago. This was around wartime. And I think, we saw a tiny little uptick here, but daily active addresses were kind of declining by then. And I really haven't seen too much special from the utility side of XRP, but we have some other metrics that might show a little more exciting news. This is the last 1 year of 30-day MVRV, the average trading returns for XRP holders. We can mark the danger zone right there, and the opportunity zone right about, close enough. So we are kind of in the same situation as Bitcoin. It's looking to be of higher risk than usual right now to jump into an investment in XRP, but it's also not above that danger zone line, meaning there is potentially still some room to climb. The last time we got way above that danger zone was that second week of February, and it worked out perfectly if you were to profit take once you were in that danger zone, because prices plummeted over the next 2 days about -14, -15%. Weighted sentiment similar to ER. Wow. So unlike ETC, which has been surging 70+%, the last week of returns for XRP have been a lot more modest at around 3.5% or so. But despite that, we're seeing a huge euphoric spike. And if someone knows why, if there was just breaking news over the last day or two, please feel free to drop that news in chat and maybe we can understand the context a little better. But all things considered, this is the most euphoric weighted sentiment spike we've seen since early September. So we're talking about a 6.5, almost 7-month high in positivity toward XRP. And that's going to be a concern. We don't want to see a lot of euphoria, especially if the project isn't really seeing any notable price breakouts compared to the rest of the markets right now. I'd even argue that the XRP is doing worse than the average top 100 coin right now. So I'm very surprised by this amount of euphoria going on right now. It is on a short, sample size, so we can even things out a little by looking at the last week or week intervals, I should say. But that doesn't change anything. It's still very euphoric. So, like I said, if anyone knows why this would be occurring, I'd love to find out. I haven't kept up with the XRP news in a couple of weeks since I heard about the SEC stuff, but some of you may be more informed than I am here. Whales are pretty tough for XRP. I don't want to waste too much time on it. We can just look at like the top assets. So if we look at like 100K to 1 million and 1 million to 10 million, this is percent supply. So this factors in the fact that XRP is constantly printing new coins and will still show everything on a 100% basis, which is great. I think the 1 million to 10 million tier probably has the best alpha here. They hold about 6% of the supply. It's probably commonly known that the 10 million plus tier for XRP holds the vast majority of XRP, which is why it gets kind of a negative rap for being a centralized coin. But I think that there's some legitimate alpha looking at this. We can even combine the 100K to 10 million tiers just to look at one distinct tier that has some alpha. Let's go back 3 years. Okay, yeah, that shows some legitimate alpha here. So there's clearly accumulation that happens when there are big dips, like there were during the Black Thursday era. And it looked like, back in November 2020, they really peaked right around this local top that occurred and then dumped pretty precipitously. And then once again, when we hit a bottom, they started accumulating once again. Interesting dump right here that didn't really do too much to the price. It did drop it a little bit. And then they really have accumulated all the way up until the end of 2021. And that was right when we had this final local top. All of this volatility here, it's pretty tough to explain just by what the whales were doing. Obviously, ever since November, right about here, prices have fallen off crypto wide. So that's not something to really pay much attention to for XRP. We can do this though. We can do price BTC, which I think would be interesting. I'll change it to green just for familiarity's sake. This has been happening. It has a little delay on colors, so we'll just leave it at red for now. The point stands though. The price of Bitcoin, the price of XRP compared to Bitcoin, looks like it does top off right when whales drop, at least here. And then the accumulation started here right when things bottomed out, so that makes sense. And then this big accumulation and then drop, that didn't really seem to have much of an effect. So I'd love to see that have more alpha. Like I said, XRP is one of the more difficult ones to decipher for top tier holders. But I do think that there's something to be said about the fact that over the last 3 years, the 100K to 10 million tier has increased their bags by 34% and overall hold 4% more of the supply than they did back then. So long-term wise, I think this is a good sign for XRP. It's obviously going to continue to be one of the more polarizing coins out there. Many of you in the chat might even be rolling your eyes over the fact that we're analyzing it right now. But there are many huge believers. We have a friend of the company, Crypto Airy, who I chat with once a month or so, who's a big believer in XRP. And there's a contingency of people who really believe that this can be one of the leading assets in crypto over the next decade here. So it's always worth revisiting what's going on here. And I think that the fact that these key stakeholders are increasing their supply right now, at least for the long term over the last 3 years, that's a promising sign that XRP has some validity. Yeah, development activity, not too much going on. It does look like it had a big peak in September that correlated with a big price uptick, interestingly. So that's something to keep in mind. I think XRP, more than the average coin, has some actual correlation between the development activity going on and where prices go next. That being said, overall, it's about in the same spot as it was 3 years ago, with about 10 to 11 or so GitHub submissions a day. Not really that exciting, probably a little bit unimpressive, if anything, for a top 10 crypto asset. All right, let's take a look at 2 more assets, and then we'll call it a call here, Balresh.
We had mentioned in the beginning for Serum, SRM, Icon, ICX, and TrueBit. That should be TRU, but I'm not sure.
Perfect. Yeah, Serum is definitely an ERC20, so we've got some good data on that. It's a relatively new coin. It didn't really start publicly trading until August of 2020, so it's about a year and a half old. We'll look at just the last year. Circulation. Yeah, we see our share of spikes here, and just like most altcoins, they do correlate with tops, so keep that in mind. The last circulation spike was relatively minor and didn't really have much of an impact. In fact, Serum has been on quite a run, but I would fathom it doesn't really have anything to do with circulation. If we look at the last 2 weeks, and I shift click, yeah, I can see why Serum's a popular asset right now. It's up about 67, 68% over that time frame. And then boom, we have this huge spike in daily active addresses, which I would presume is the largest in its history. No, well, I guess if you want to count its Exodus spike when it first started getting publicly traded, that would be an exception. But all things considered, this is the largest spike in its regular publicly traded history, where it went from an average of 90 daily active addresses a day to suddenly getting 1,800 addresses per day. Typically, these correlate with tops, so I would keep that in mind. Yeah, if we look back here, right before the all-time high for Serum, we saw a huge spike here. We saw a huge spike here, which was a leg before the all-time high that occurred in early May. And now we're seeing another one. So on each one of these 1, 2, 3, 4, actually, yeah, all 4, if you want to call all 4 of these spikes, even this minor one here, these were all correlative with tops. That doesn't necessarily mean that's what's going to happen here. But historically, I'd be wary of a singular spike just popping up like this for whatever reason it happened, whether this was a pump and dump group all getting involved or what. It does appear that prices are staying afloat for now, which is good to see. But, it's been 2 days since the huge spike. And even though prices have risen, I'd be really weary over the fact that such a huge amount of addresses all interacted at once just a couple days ago. Weighted sentiment would be a good one to check out. We're looking at the weekly view. I think that's fine. Interesting to see So going back to last week, we had this big euphoric spike, which happened during the huge ramp up between the 16th and 19th. And now it's come back down to earth, and it doesn't look like people are believers in Serum continuing. This is a good sign. It means that there actually could be a little more steam on the rally. I would combine this metric with on-chain metrics like daily active addresses and circulation to say that there's probably a little bit of tempering you have to do with your expectations because of that huge daily active address spike. But in a vacuum, this looks fine. It seems the euphoria came back down, even though prices didn't, which is a nice sign. Typically, euphoric spikes like this do lead to tops, especially here. This one, about a week delay, but all three of these were pretty euphoric. So yeah, it worked out pretty well there if you were following weighted sentiment. I think all things considered, this one looks like it was a bit of an anomaly because prices didn't drop yet. They still could. Historically speaking, when you see this kind of rally with this kind of weighted sentiment spike, it's justified to take some profit there. But so far, that has not come to fruition. So just keep that in mind. We'll see how Serum does over the weekend. And then supply and exchanges is a very interesting metric to look at. It looks like when supply and exchanges move down really rapidly, that's a good sign that prices can really surge. They were it looks like it peaked around 65, 66%. And then by July 30th, just a month later, it was down to 38%. That's a massive plummet of Serum moving away from exchanges and into cold wallets. And prices ever since that plummet, they ended up until that local top about a month and a half later, prices surged 270%. And then supply has really been falling off ever since and staying away from exchanges. It's now down into single digits at 9% or so. So overall, from a macro perspective, I think supply and exchanges is looking like a pretty positive metric for Serum. As far as whales go, let's see what kind of alpha we can find here. Price is take off. Actually, I'll just do this. Yeah, price is sitting around 250. So we'll want to look at the 100K to 10 million here. We don't want to go to 10 million plus because that's going to be almost all exchange addresses. Interesting. It's kind of a mixed bag. Big accumulation here correlated with a price rise. We are looking at price BTC, mind you. And then it looks like they kept increasing perfectly until November 3rd when this local top hit. And it was just a big plummet and a lot of volatility ever since. But overall, if you were following the peak in early November and you took profit along with the whales right at this spot, you'd be pretty happy with the fact that you took profit at the local top. Not this all-time high, mind you, but at least this local top right here. Not too much else to say. It does look like this whale line has pretty good alpha with the price of Serum versus Bitcoin. So I think that 100K to 10 million is the tier to look for if you're following what the whales are doing. Just curious to see what all time it's been doing. Yeah, makes sense. So it pretty much was a steady accumulation for Serum up until this local top here on November 3rd. And that's when it peaked, and it's been dropping off ever since. It's tough to look at the first 6 or even 12 months of a new asset because there's so much supply going all over the place to new addresses as the community tries to figure out whether they want to hold it or not, or use it for pump and dumps, what have you. But Serum looks to be pretty legitimate in its growth, and it's been on a very volatile path. But I like to see that there is more supply held now than there was when it first got its legs. It's probably about 4 times as much held as there was during that first couple weeks of public trading. We'll skip exchange flow balance. Network realized profit loss is showing a little bit of a minor spike, so keep that in mind. Man, no development activity. I wanted to check that out because I think it's a really interesting project. Anything on the social dominance side? Let me check that. Not really. We did see a huge spike here about a week ago, but nothing really to write home about. And it did have a very subtle effect here, followed by a continued rebound. And now it's not really being talked about at all, which is a good sign. So Serum is sneaking under the radar a little bit, despite its big 2 weeks of action between 67, 68% gained. So yeah, overall, whoever suggested Serum, thank you. I think it's a really interesting project to check out and does show some signs of having some serious validity and long-term traction. This could be just the beginning, but we have to see how Bitcoin looks and whether it can sustain itself. If it does, Serum might be a nice breakout candidate. All right, let's do one more quick one, and then we got to conclude the call, guys.
We also got an input for Compound. Want to check that out?
Okay. Yeah, let's check out Compound because it's an ERC20. There should be plenty of good data on it. Actually, I want to start with MVRV divergence for this one. I think it's an interesting one. Compound is showing as one of the leaders, showing as semi-underbought, despite many of these projects having big rallies and now showing semi-overbought signals. Compound's on the other end of the spectrum because it hasn't been doing too well in the last week or so, meaning it could be a buy low candidate. If we look at just the last week, let's go back to the 18th or so. Yeah, it's actually down 0.5% over the last week, and circulation looks like it's been pretty flat. I won't waste too much time talking about that. Daily active addresses. It was on a pretty long-term decline here. Ever since early February, it is starting to increase a little bit again. 438 active addresses isn't too much though for a top 100 asset. I'm a little concerned about that, even though it's starting to creep up again. Being under 500 daily active addresses, it's really tough to sustain like a top 50 to 60 status among market cap ranking these days. So we'd probably want to see that pick up more. And considering it's pretty suppressed compared to where it was a year ago, it shows that this price plummet at minimum has been justified. MVRV 30-day, so it has been up a little bit over the last 30 days, as many projects have been since the day after the war was announced. MVRV is at about plus 5% right now, nowhere near the danger zone. In fact, the only time that Compound went above the danger zone was on November 3rd, where it topped out, just like Serum, the same day, and then corrected pretty quickly here. So I would say that Compound looks relatively safe on the 30-day, especially because like the 1 day and 7 day and 90-day, people are very much in the red for Compound, and that's why it's looking like one of the best possible additions to one's portfolio based on MVRV on this model. So MVRV 30 days looking okay, but the other time intervals are looking quite good. Weighted sentiment is interestingly up for Compound. Not significantly though, it isn't a huge spike like here, or this euphoric spike that happened the second week of November. So not much to say there other than it's a little surprising to see that people are positive about it. It could be because it's being discussed as a buy low candidate right now. And obviously it's a DeFi asset as well, and that's always of interest to people, especially when people get bearish. That's when DeFi starts to become a little more interesting to invest in for people because people want some passive income. As far as supply and exchanges goes, it's actually looking like it's been increasing, which is different from most assets we've been seeing as of late. Go to the last year is fine. It's been increasing pretty much steadily over the last year. If we look at its bottom just about a week after 1 year ago today. So it was sitting at about 6.5% on supply. That has almost tripled. It's at about, well, I shouldn't say almost tripled. It's up 138% compared to where it was a year ago. And that tells me that Compound is being used actively as a DeFi asset on exchanges, which makes sense, but it also means there's an increase in major sell-offs because of that. So not a great sign there for a long-term macro perspective. We'd rather see Compound having less and less on exchanges. Whales. Let's see if we can find anything that could be some good alpha here for everybody. Compound is sitting at about $119. So whales would probably be in the vicinity of 100 or 1,000 to 100K. And it's moving up. That's good to see. Over the last year, it's been a constant increase where the whales were holding 26% a year ago, and they're now sitting at 42%. That's a huge rise. We could even go back 3 years and see if there's any. Yeah, wow. So they were barely holding any. Oh, this was prior to trading. So we'll start here when trading really kickstarted. Start around the second week of trading in late June. They were holding 12%, but we're still about 3.5 times higher now, held by this key whale tier, despite prices really plummeting. That's interesting. I mean, prices compared to Bitcoin, they're at about all-time lows right now. Compound hasn't really gotten much traction at all. But considering how much is being held by 1,000 to 100,000 coin addresses, when it does break out, Compound is going to break out big. I can't tell you guys when that's going to happen, but we can clearly see just on these percentage increases against Bitcoin, from January 7th to February 4th, 204% increase against Bitcoin here from June 26th to the July 3rd. This was just 1 week. It went up 70% against Bitcoin, or no, even 97% against Bitcoin. So Compound looks to be one of those coins where when it does break out, if you're getting in on the ground floor, you're going to be very handsomely rewarded quickly. And I do like the long-term look of these large key stakeholder addresses continuing to increase their supplies without much resistance. One final thing, I want to take a look at development activity. Not the greatest. No, there's not a lot of development at all over the last, well, let's just go to the last year. Yeah, this isn't what you want to see. We saw the biggest spikes happen in April when it was approaching its all-time highs, sitting around $850 there. It had a little bit of an uptick here. It does look like when there are big spikes in development activity, it provides a little bit of alpha for future price movement. But lately, there hasn't been much at all. And especially if you look at these numbers in the top left bubble, 0.71, 0.14, 0.2, it does look like development. There is like 1 or 2 development activity submissions the last couple of days, but this isn't much at all. When you look at Cardano, when they're getting like 300 to 400 development activity submissions, Compound is like the other end of the spectrum and really not seeing much work done or innovation to it at all. Doesn't mean it's a scam coin where like it's a pump and dump kind of coin, but it does mean that the team involved with Compound is not very involved. So Compound, kind of a mixed bag. I really don't like the look of development activity, but I do like the look of many large tier addresses holding more and more of the supply. So supply and exchange is obviously not great there. I'm a little bearish on Compound. I don't think it looks the greatest. Not investment advice, of course, but at least based on historical metrics, I don't see enough encouraging signs to suggest placing people's hard-earned money in it, at least right now. All right, guys. Well, we went through quite a few altcoins and metrics here. We did about an hour and a half. I hope this was helpful. We'll continue to try to focus more and more on the types of assets you'd like us to explore. And I want to thank everyone for coming in and supporting the channel. Make sure to tell your friends about this. Make sure to subscribe to our YouTube if you haven't already. And I'm looking forward to another great week. Hopefully this rally can continue. Hopefully, real world concerns and crises can continue to temper themselves. And I wish you all a very safe, happy, and healthy weekend. And any questions that arise, just ping us on Discord and we'll be happy to help. Cheers, everyone. Talk to y'all soon.